I think certainly there's been some disappointment in the applications that should drive growth for 5G. I think even yesterday there was some discussion of the type of sales that Apple's going to see. And that's the same thing for the operators. The upgrade rates are up, but maybe not up as dramatic. There were some people talking about this super cycle that was going to occur, but clearly did not occur. Apple's had great numbers for a variety of reasons. But also with these wireless carriers, it's been a huge subscriber growth year. And normally they add, as an industry, about 6 million subscribers. And this year they're going to add about 9 million. These are postpaid phone subscribers. So there's some investor apprehension about what happens next year if that reverts to kind of a post-COVID, more normal range of subscriber growth, and who is going to give up that subscriber growth.
Hey, Sarah, AT&T obviously in the process of disposing, or rather spinning off the Warner Media piece. It looks like all these telecom companies effectively become clean companies when this is over. My question to you is whether you think that you're going to have some others revert, thinking they need to buy something else.
I think the thing that they're going to continue to focus on buying is going to be spectrum. This is going to continue to be a spectrum war. And as it becomes more competitive, that makes investors a little bit nervous, especially right now if you're Verizon and AT&T. T-Mobile, with its merger with Sprint, has really come to take the lead in terms of broad coverage of 5G. But Andrew, I'm glad that you brought up some of those divestitures, because I think actually some of that's weighing on the stock. AT&T continues to say that it's going to cut the dividend for some of those institutional investors once it closes that deal to spin out Warner Media with Discovery. Of course, that's going to have investors nervous.
Hey, Walt, we were talking to Larry McDonald earlier in the show, and he made an observation that given how the losses that a lot of, I imagine, AT&T, maybe Verizon and other shareholders may be taking, that they may be selling effectively as a tax loss strategy.
It definitely could be. And to Sarah's point, in AT&T, it's a more unique situation because the investors may get shares of Discovery. We don't know how they're going to execute on that transaction. And, does an AT&T shareholder that's getting a dividend really want to own Discovery? But then can you buy Discovery? So there's complications there. And to your point, from a tax loss selling standpoint, I mean, that can certainly be a driver when there's concerns of inflation. And a lot of the things that have been driving these stocks have been dividend yields. And what is the attraction of a dividend yield in a more inflationary market?
Well, among the stocks on the screen right now, which one do you like the most if you're going to own one?
I mean, we like AT&T right now just because, I mean, it's really getting beat up in a variety of ways. I mean, when the stocks are down, I mean, T-Mobile's been down more than AT&T over the last 3 months. But the headlines are AT&T is at its 10-year low. And everyone hated the transaction for Time Warner, and now the new CEO, Stanky, is getting out of it, and there's still there's negative things said about the company. So I think at a 13% free cash flow yield, at a dividend yield, even after they cut the dividend yield at 8%, and they're growing faster than T-Mobile today, to us, that seems like the obvious relative trade. And frankly, it's worked out so far in terms of it just hasn't gone down as much as right. T-Mobile. So when you look at 22, to us, if there's a recovery in these stocks, you're going to see the bigger bounce in AT&T.